Happy Monday, Maverick traders. This is Rob Reinhold, and this is the Market Roundup, December 4th. Cannot believe we have 1 month left, and then we close the books on this year. Looking forward to it. In this session, we are going to be going over what happened today. It was a quiet day. We're going to take a look at some of the news. We'll take a look at commodities. And then we're going to look at the market with a fresh set of eyes and say, did anything change? Do we have a technical scoring change? We are technical traders here at Maverick. That's all we care about. So that's all we are going to react to. Is there a technical change? And as always, we're always looking for good setups. I've got one long, one sideways, and one bear for you in this session.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
The market just started off weak today, and it really wasn't anything that was in the news. We just are at the end of a 5-week run in the markets, and we've had a big run, and so we're just a little bit out of gas. That being said, take a look at the final results. Dow was basically flat, S&P down 0.5%. It was down over 1% at one point at its low. The Q's down 1%. At one point, it was down 1.6% at its lows. And then take a look at the Russell. Someone forgot to tell the Russell this was going to be a weak day today. It actually never went negative the whole day and held on to a nice gain by the end. We had a big pullback in gold. That should be gold down 2% and oil down 1.5%. But take a look at the market internals, and then we're going to take a look at the chart. And you're going to see that, yes, this was a down day, but it wasn't really that down. Take a look at the advanced decline line. It's basically 50-50. Take a look at how many stocks are above their 20-day or 50-day moving average, and it is a lot of them. Let's check in on this chart. And when you take a look at this candle, you're going to say to yourself, well, geez, that wasn't a negative day at all. And you're right. This candle right here, look, we gapped down, we fell to the low, and then we recovered and closed at the high. And all of this is just within this high base. Remember, if you didn't watch my video over the weekend, the trading room video, I talked about how there is a ton of people on the bid, meaning the market can't fall because everyone's waiting to buy when people sell. So anytime the market sells off, the people are just sitting there. So the market never goes down. Now look, there's not a huge rush into markets as well. That's why we're not really seeing substantial prices higher. But at some point, people are going to have to start buying off of the ask. And that's going to drive this market likely higher into the end of the year. So overall, this to me was a very, very good candle if you're bullish. Because we got tested, it gapped down, there was absolutely no follow through behind the selling. And if you take a look at the Qs here, the Qs at one point were threatening to break through the 20. By the end of the day, the buyers had come back in, and we're still just in the space. That's all that's happened. We went down and tested the low end of the base, and that test was very successful. Buyers came in off the low of the space. This market is telling you it does not want to go down. If we take a look at the heat map, you're going to see a couple things right off the bat. You're going to see the big cap tech stocks got hit. Meta is all the way down to 215, had a bounce off of 215. Nvidia was lower, Amazon, Tesla lower, but outside of the big cap tech, a lot of green out there. This to me was more of an up day than a down day, even though the market averages said the opposite. So the question is, have we changed anything? And the answer is no. We're still high basing. I've got us at a +2. I got us at a +1.5 for the week. Even though we started the week off down 0.5% in the S&P, I still think we've got some good strength coming up throughout the rest of the week and throughout the rest of the month. I'm quite bullish going into the end of the year. Let's go in and take a look at a couple possible setups. We're going to start off with a bullish trade here. The most bullish trade I could find was Expedia. Take a look at this beautiful, beautiful high base. And you can see we are punching out of the top of this. This is a really strong stock that just refused to go down. I mean, this thing ran from 92 all the way up to 140, and no one is selling. And frankly, people are still buying. This is showing a lot of strength. So the question is, how do you play this? I love to play these on diagonal call spreads. So I'm looking like a 135, 140 diagonal call spread. Or if I want to get a little bit more aggressive, maybe 135, 140, 250, or 145 if they have those strikes. But this one, again, looks very, very good. Very strong, just breaking out of a 2-week high base to the upside. Let's take a look at a sideways one here. Now, this one is a little bit bullish for me. So I'm looking at this saying, okay, we've got some overhead resistance up here, right about the 35 area. This is Invitation Homes. The home builder sector is flat to mildly bullish. So that's really how I want to play it, is I'm going to play this for that 35. So I'm going to do a targeted butterfly. With 35 as the middle, I'm going to put my butterfly right here. So I do want this to go up. I do want this to go up into that 35 area, but it's really more of a sideways play, really profiting off the time decay that I don't think this thing is going to break out and run past 35 anytime soon. And let's take a look at a short. This is Lithium, or Livent Corporation. LTHM is the symbol, but you can see here, this thing is in trouble. This thing is doing a low base, and it's really more of a descending triangle. We got a descending triangle here. Every time it comes to the upper trend line, it hits it. We did the same thing here. We came up to that upper trend line, and sure enough, we hit it, and we backed off of it hard. Until this market breaks down, which I don't think will happen, I can't get really bearish on anything. So looking at this chart, I would love to be more bearish. This is a really, really ugly chart. Most of these times, these things break down. Here's the problem. We're just not in that environment right now. So the most aggressive trade I can do is about the wimpiest trade you'll ever see, a 13-14 bear call spread. That's basically right in the center of it. So the stock right now is at 1350, a 13-14 bear call spread. Below 13, I'm going to get a max gain. Above 14, max loss. I'm going to get about 50% of this spread. So this is going to be a 50-50, 1-to-1 risk reward. This is about the most aggressive play I'm going to be making on the bearish side while this market high bases. Let's talk about tomorrow. The markets are high basing. I would not be surprised if this week we get 4 days like today, where we either gap up and then fall a little bit, gap down, rise a little bit. I could easily see us have 4 days where nothing really happens, and then 1 day where we go up 1%. I think that's exactly what this week is going to be. We do have the payrolls report on Friday. That day might be Friday. We might have 4 really flat, boring days until Friday, and then we might get a nice surge to the upside. But the charts are all saying the next major move is likely higher. We've got seasonality patterns in our favor. We've got year-end performance chasing. There's a lot of things when you take a look at the market for the next couple weeks really gives you a pretty good green light on the bull side. Now, going into January, all bets are off. We are not going that far out, but just looking for the next couple weeks, the market looks like it does want to grind higher and do a little bit of a melt up. Tomorrow morning, we're going to get 2 economic reports. We're going to get the services PMI and the JOLTS job openings. The JOLTS job openings has been something the Fed has talked about specifically. These used to be well over 10 million. They're now down to 9.3 million. And the Fed said we want these under 10 million. So this is another number that's going in the right direction that is making the Fed back off quite a bit. And then check earnings as always. Know what your stocks are doing as far as earnings go when you trade them. That is a market roundup. Everyone have happy trading.